Qualcomm might have won the battle, but it might not have won the war just yet. Yes, in this video I want to discuss Qualcomm, which in my opinion is still one of the most undervalued semiconductor names in the market. Yes, it's also true that this year this stock has been underperforming. It's up 7.8%, but as you can see, just like with plenty of other semiconductor stocks, at one point this year this was up close to 60%. Now, if you zoom out a little bit and we look at what has happened with Qualcomm in the last 5 years, we can see that the stock has gone up by 93%. Right now, it has a market cap just short of $170 billion and a forward PE of just 13.7 times. It also pays a nice dividend with a dividend yield of 2.22%. Now, you might say, whoa, that's quite a low forward PE for a company like Qualcomm. And I agree. But if you look at the analyst expectations for the coming fiscal years, it's not growing as fast as the others, or at least that's the current expectation. Fiscal year 25 will see 9.24% year-over-year growth in sales, with approximately the same growth for EPS. If we look at fiscal 26 and fiscal 2027, we can see that sales growth is decelerating 6.4% and 3.8% in fiscal 2027. Looking at EPS, about the same for fiscal 26 as for fiscal 25, but then only 1.38% in fiscal 2027. Some of you might know that's because, well, the market is anticipating Qualcomm to take a hit when Apple moves away from Qualcomm when they announce or well they will introduce their own modems. Currently, if we look at the average analyst price target, that sits 33.9% higher than the price we're at right now, and yes, since August, the average analyst price target has come down from $220 to now $204.7. Looking at some pricing metrics, and this is where things get a little bit interesting. So as we've seen, forward PE quite low, but if you look at the 5-year mean, it's not like it's been in the 20s. No, it's always been around that area. It's at 15.6 times. EV to EBITDA, price to sales, price to free cash flow, all quite close to the 5-year mean. And actually, if we look at price earnings to growth, that is much higher than a lot of other names. It sits at 2.71. So while a forward PE of 13.7 just like that might seem quite cheap, especially if you compare it to the industry average, but then if you compare it to what we've seen right now, the 5-year mean for Qualcomm, doesn't seem that cheap. Now, of course, what has happened before might not happen in the future, good or bad. In Qualcomm's case, yes, it's true that previously they've had quite a lot of momentum and strength, and maybe in the future there might be some issues, for example, with Apple leaving them. Now, those fears have been going around for quite a long time, and up until now, Apple has not succeeded to replace Qualcomm and come out with a better product. Maybe they'll succeed in a year or two, remains to be seen. Now, more recently, there was also a legal battle with ARM, which Qualcomm did win, but the only one right now. There might be a retrial. Remains to be seen what happens. But currently, they did win. The battle might win the war. Remains to be seen. But I do want to cover Qualcomm a little bit deeper in this video. If you enjoy this type of videos, leave it a thumbs up, subscribe if not, we really appreciate that. If you want to support me even further, do check out the link down in the description and in the pinned comment with the top 10 best stocks to buy now, or go to full.com/couchinvestor. Thank you very much. I first want to start with the Qualcomm versus ARM. Tantra analyst on X and has his own website did cover the day-to-day action very, very closely. So I highly suggest you go read that blog if that's of interest to you. So there were a couple of things that happened during the last day. The judge summoned the parties back into the room and informed them that the jury was deadlocked on question 1, whether Nuvia breached Nuvia ALA's architecture license agreement, and had decided on question 2 whether Qualcomm breached Nuvia ALA, and question 3, are Qualcomm products using Nuvia technology covered under Qualcomm's ALA? And so the results were as followed. Question 1, no decision, and question 2 and 3, Qualcomm won. Now before the decision, ARM's lawyer tried to convince the judge not to accept the 2 verdicts, but none of the arguments persuaded the judge. Additionally, the judge put a high bar for retrial. She will order mediation and is not keen to see them back in court quickly. That makes this case a sure win for Qualcomm. Again, they won the battle, might also have won the war, that remains to be seen. Now, this is a very impressive win streak because they did win against the FTC. They won one and settled another case against Apple, and now they won against ARM, which, as you know, is still owned by SoftBank since they own 90% of it. And now that we've got that out of the way, let's look at the future. So this comes from Qualcomm's Investor Day presentation. They say that they are in a unique position at the edge that drives and expands the total addressable market of approximately $900 billion by 2030. That's over 50 billion connected edge devices currently shipped between 2024 and 2030. Qualcomm is not just for smartphones, or their chips are not just for smartphones, handheld devices. No, they're also in automotive, which has grown quite quickly. Last quarter, they're entering the PC market. Now, that remains to be seen if that's going to be successful or not. We wait and see. The bar has been set quite low. They're, of course, in mixed reality, so glasses, VR devices, they're going to be a big player in that. And then also end-to-end intelligent industrial platforms. A quick recap of what has happened last quarter. Revenue increased 19% year on year on a GAAP basis. Earnings before taxes increased 83%. Net income is up 96%. And diluted earnings per share is up 96% as well. For fiscal 2024, so the whole year, they're already now in fiscal 2025, revenue increased 9%. EBIT increased 39% year over year. Net income 40%, and EPS up the same amount. If we look at what's expected when it comes to free cash flow growth for the coming fiscal year. So in fiscal 2025, free cash was expected to grow by 10%, followed by 14.2% in fiscal 2026, and then actually a decrease of 3.1% in fiscal 2027. Looking at how they generate their revenue, so the majority comes from handset revenue, that's true. Small part from automotive, but that has increased quite a lot year on year. Then you've got IoT, Internet of Things. And of course, revenue is split between two segments when you read the earnings report, QCT and QTL. QTL is basically the licensing revenue. And now switching to where the revenue is generated, and that might be an issue, right? Because as you can see, a big chunk of revenue is generated in China. And as you know, a lot of these semiconductor players that got a lot of exposure to China are now under pressure because of, well, trade wars, restrictions, Donald Trump, China, Taiwan, and all of that. So yeah, the fact that a lot of revenue does come from China, that's always a risk here. But as you see back here in 2023, revenue from China, still the largest chunk, but it was lower than 2024 and lower than 2022. Remains to be seen what happens in the coming years and if United States, South Korea, and maybe even other areas can take a larger piece of the pie. Now, if we do a quick reverse DCF here, and I have to repeat myself again and again, and if you have other ways to do this by taking the usual numbers, right, with the terminal growth rate, 2%, 3%, or 4%, do explain that in the comment section below. I use here the risk-free rate, the current one, 4.53, a discount rate of 8.38%, which is basically the implied risk premium plus the terminal growth rate. You reach that number. And so to justify today's price, well, as you can see here, the implied growth rate sits at 0%, and the stock price is a little bit higher than the price we're at right now, so priced for zero growth. Now, of course, you're going to say, yeah, but that's because terminal growth rate is just too high. If we put it, let's say, at 3% or something like that, then first of all, the discount rate will be lower as well. So let's do that. And as you can see, if I put the terminal growth rate at 3%, then discount rate is now 6.85%, which is quite low. So let's put it back to 8%. And here we can see that the implied growth rate to justify today's price is approximately 1.7%. So they will have to grow free cash flow by 1.7% for the next 10 years. Now, in my opinion, that's quite low. Now, of course, as we've seen in fiscal 2027, free cash flow is expected to drop. But then again, in the next 2 fiscal years, it's expected to grow much quicker than just 1.7%. So, yeah, there is definitely an opportunity here. And the last thing here is to look at the stock. And as you can see, we're below all the moving averages, the 200, the 50, and the 20-day one. We're a bit in no man's land, let's be honest. Maybe if we see a solid green candle, then yes, that might give us a sign of, okay, $150 is a bottom. But right now it's true that we're a bit in no man's land here. RSI is nowhere near being oversold on the weekly, even on the daily. Yeah, it's low, but that's about it. Could say that maybe 150, as we've seen previously, might have been a bottom, but that remains to be seen in the coming days. Of course, with Christmas, New Year coming up, volume is going to be lower than expected. So yeah, I think you have time. You have time to consider whether or not 2025 is going to be a good year for Qualcomm or not. I think it's a tremendous company trading at, let's say, cheap pricing, but then again, it has always been trading at cheap pricing. The question here is if you believe that this company will continue to dominate and actually become more important in the whole ecosystem in the future. Let me know what you think down in the comment section below. Like, subscribe, all of that, and I'll see you all in the next one. Bye bye.